Hey, what's up, everybody? So, as you guys are going to learn on this channel, I'm big into cryptocurrency. And one of the things that I want to talk about more on this channel is Bitcoin, cryptocurrency, things like NFTs, things like up and coming tokens, initial coin offerings, things like that. And one of the things that I found really helpful when I was initially looking at Bitcoin, Ethereum, and all those different coins is how do you value them? How do you know if it's going up or down? And the thing that was the most basic trading view aspect to look at was a bar chart. And we're going to take a look at that right now and see quickly at a glance, how can you figure out what price action is? So the charts that I like to use are on tradingview.com. If you go to tradingview.com, you can look at stocks, cryptocurrency, Forex, any trading mechanism that you want. Up in the top left here, we're looking at Bitcoin, and it's Bitcoin to the US dollar, and it's based on the Binance chart. So we're just going to get off of this. So on a bar chart, why is it called a bar chart? First of all, each one of these is a bar, right? Up and down. There's different timelines you can look at. Typically, the easiest way to do this is to look at the daily bar chart here. If we go to days, each one of these bars represents one day of trading action. If you look at the bottom here, you see June 13th, 2021. The next days would be the 14th, 15th, and so on. If we were to do the 1 hour chart, that breaks down every one of these bars into 1 hour increments. So what does that mean? Well, on a macro level, if we just look at the daily chart and we look at Bitcoin and we zoom out and we zoom out and we zoom out, and we go back here to like early 2021 or 2020, we can see that the price of Bitcoin was around $7,635. And today, the price right now currently is $63,130. So that just tells us in a real simplistic manner, hey, look, a chart that starts low on the left and goes up to the right is a good chart. We're making money. But what does that mean? How do we measure these things? So if we zoom in and we take a look at the daily, each one of these bars, again, representing a day. If we look at today, November 2nd, 2021, what does the top and bottom mean? And what does this little wick on the top and bottom mean? So what this means is that when the day opened and closed, so if this was a stock, it would be the open of the NASDAQ, the close of the NASDAQ. This is where the price action began. So on October 16th, 2021, the price was as low as, if we come all the way over to the right-hand side here, we see 56,929, and Bitcoin traded as high as 63,996. Now, what does the middle block mean? Well, the middle block means that when that time opened, it started here. When the time closed, it closed here. And you'll notice the next candle starts here. So even though the price action was all over this during the 24-hour period, it was as high as here and as low as here, it opened and closed here. And those are measurable indicators in terms of if price is consolidating, where it's going, and things like that. So if we look at today, you'll see yesterday the price closed here, even though it was as low as 59,000. The price opened at 60,000, got as high as 64,000, and it started to retrace a little bit. So these are good indicators in terms of which way the price is going. And if you just look at on a big chart and big level, you go to TradingView, you type in Bitcoin USD, you can see where that price is and where the price is going. The most common indicators that we see are moving average. So if I look at indicators here, I'm going to type in moving average. And this time I'm going to type it in and spell it correctly. There we go, moving average. We get 3 different moving averages. The common moving averages that are used, whether it's stock, cryptocurrency, or any other measurable metric, is 50, 100, and 200. What does that mean? So 50 represents 50 bars worth of action. If we're on the daily chart, that's the past 50 days. How has that been? We look at the style. I'm going to do that as green so we can really see where that is. Hit OK. If we look at the next one, which is going to be the 100-day moving average, make that 100 days. This looks at the past 100 days of price action. And we're going to go to the last one, which is going to be, actually, we'll just make this one 200 since this chart hates me. Working with a funky mouse. This mouse has like 78 different buttons on it. So we'll just go with 50 and 200. So what does this mean? This green bar, this green line represents a backwards looking view at any point. So this is 50-day moving average. So if we're looking right here at September 10th, 2021, this point in time represents the average of the past 50 days worth of average. If we went back here and went from here all the way back to here, this shows us that the price has basically kind of gone on an upswoop. That's why this line has gone on an upswoop to here. What does that mean? That means that this is basically a trending line to see where price goes, where there is support, where there's typically resistance. Support being, if we look at the weekly chart, you'll notice something that Bitcoin has always, if we're looking now at the weekly chart, this green line at 50 represents 50 weeks worth of moving. It's always found support on the 50-week average. Even though it's been up and down, whenever we've had bear markets, for the most part, when Bitcoin has come down and the price has touched the 50-week moving average, we've seen a rebound. So if you're buying long-term Bitcoin or anything else, and you see that the price has come down to that 50-week moving average, which historically has been a level of support, it's a really good time to buy. When you go back on the daily chart, we can see that this is the 50-day moving average. The red is the 200-day moving average. The further out you go, 200 days, 100 days, 50 days, the more likely it is to be an accurate measurement. For instance, price can fluctuate greatly minute to minute, can fluctuate less day to day, less month to month, and even less on a macro scale. So just from a simple point of view, if you go over to TradingView and you look at anything, you can look at Bitcoin, you can look at stocks, you can look at Tesla, and it works the same way. We go to Tesla, that's Tesla. We want to go to stocks here, take a look at Tesla on the NASDAQ, right? And we look at what is the Tesla price been. Right now, Tesla is, super overvalued, trading at about $1,100 a share. And if we look back here, we see the same thing. We see that, hey, look, Tesla's been a good investment since back here in 2020. If I put money into Tesla at $80, it's now $1,100. We see this crazy parabolic run here. We see where it's gone up and down, and we can get into charting patterns like head and shoulders. We'll talk about MACD, which is moving average, convergence, divergence. And there's a bunch of different metrics that you can lay over the top of your charting to really see where the value is, what's a good point of entry, what's a good point of exit. Typically, the old adage, buy low, sell high, is in these sweeps, right? Buy low, sell high, buy low, sell high, buy low. Now looks like a really good time to sell high if you're into Tesla. And these are just one of the metrics that I look at. But from a most fundamental point of view, you go to TradingView, you go to Bitcoin, US dollar, and it's good to look at historically what has Bitcoin done in these cycles. Are we lower than we were 6 weeks ago, 6 months ago? Do we see patterns developing? Do we typically go into low dips and then have big pullbacks? One of the things you'll notice on Bitcoin is that whenever you have parabolic run-ups, parabolic meaning we go crazy, we get 30, 40, 50, 60% in a short period of time, that we have these pullbacks in the market. For instance, here, if we take a look and we went from this run up back in December and we went up to, what was that? That was 128% run up. Well, then the dip we had was about a 50% pullback, which is pretty standard. So about a 50% pullback here. We had another big run up from 30,000 all the way up to 57,000 and a little bit of a retrace. And those dips are healthy. They're healthy corrections. The problem is that unlike stocks and Bitcoin and cryptocurrency, you see these humongous 50% run ups and then a 30% retracement. And people focus on the retracement. They go, oh my gosh, I just bought it in Bitcoin because everyone's talking about it. It's at the top of the market. It's $65,000. And then they buy Bitcoin. They put in their $500. And then suddenly it loses 20% and people panic. They don't realize that their entry point may have been off a little bit. They have what's known as FOMO, fear of missing out, right? Like everyone sees these big gains, but they don't want to sit through the pullbacks. There's an old saying in Bitcoin, if you're not able to sustain my 30% pullbacks, you don't deserve my 200% run-ups. So hopefully you guys learned a little bit. Go to tradingview.com, take a look at some of the charts. There's a bunch of great tutorials on TradingView. You can see the charts. You can see the price action, where it opened, where it closed. You can go back and back test some of your theories on where the price action is going to be. And yeah, we're going to go through more of these charting things later. If you have a question, a comment, a concern, drop it down below in the comment section. If you want to see more videos like this, hit subscribe, give me a thumbs up. And if you do leave a comment, I'll make sure to get back to you guys. Thanks for watching.